Okay. Welcome, everyone. I'm Brendan Walsh at Rocket Dollar. Excited to have everyone here today. You might have talked to me on the phone sometime in the past. Thankfully, we just hired two new salespeople, Tristan and Nick, to also kind of assist with questions coming in on our sales line. But why we have these webinars, if this is your first time joining, there's a lot of our customers, this might be their first time investing in alternative assets, or they have like one favorite alternative asset, and they're really not aware of all of the different options that are available in a self-directed retirement account. When you can invest in almost anything allowed by the IRS, that gives you a really wide menu of options. So part of these webinars are just to make people aware. We have experts come in on a variety of different asset topics and say, hey, let's widen everyone's horizons a bit. So we started talking to Kenny, and what really caught my eye is I've had some family that worked at McDonald's corporate. Franchisees were always such a huge part of that business. I got really excited to talk to Kenny to kind of expose the Rocket Dollar world to franchises. So Kenny, I'd love if you introduce yourself and kind of some exciting things that you've been working on.
Yeah, absolutely. So my name's Kenny Rose. I'm the founder and CEO at Franshares. Been in the franchise industry almost 10 years now, mostly working as a franchise broker, which is kind of like a realtor for the world of franchising. And, having worked for the world's largest franchise brokerage, as well as starting my own, eventually got featured in Forbes, ABC, just had a Business Insider article on me February this year. So we've reached about 300 million people on my views in franchising. All really led up to people who didn't really have a way to invest in franchises. If you didn't have 6 or 7 figures in cash, or willing to leave your day job, or really had the right skill set. And so that's what we aim to fix here with Franshares, and opening up this as an investment class for anyone to partake and have both equity and cash flow. Mm-hmm. And we actually just closed a round led by Chicago Ventures, who's actually first checks into Cameo, M1 Finance, and a number of other large startups, and excited to have them on.
Great. And and before we always get started, we always like to do a quick 101, what is franchising? And this is just so, we sometimes have super experienced people on calls, and then we have people who are just seeing an asset for the first time. So Kenny, I'd love if you'd give a super 101 explanation. What is a franchise, and why would, a big business and also a franchisor, trying to open a franchise?
Yeah, absolutely. So while I explain the fundamentals of what a franchise is, hoping in the chat people can name some franchises that they're familiar with, just any example. So franchising 101, really what a franchise is, it's a way for a business to expand their operations both quickly and efficiently. So they have a base model that they have learned works and makes money, and they know how to multiply it across the country. So in working with franchisees, they're able to, well, for one, from a franchise point of view, they don't lose equity in their company or get expensive loans, but instead they're working with partners who are really vested in making the franchise work. They're also there because it helps people, instead of hiring a manager that may not care, instead they are bringing on these equity owners. And, as we look through the answers here, I see McDonald's, Nectar Juice Bar, Supercuts. Yes, it is.
24-hour
Fitness, Chick-fil-A, yeah, Panda Express. And so obviously the mass majority of these answers are in the food industry, because that's really what most people know franchising as. But realistically, there are over 4,000 different franchise brands in over 100 different industries. So food's the most notable one because it's the most competitive industry. But over my years, I've worked with 600 plus different franchises, and I've seen everything from the obvious food to hair care, automotive, and fitness to the very extreme ones. Adam and Eve has a franchise brand. They have waste management. They have window cleaning. I've seen custom tailored suit franchises, clothing recycling ones. Pretty much any business you can imagine, they have a franchise for.
Great, such a variety, and I want to compliment the attendees. This is by far we usually have pretty silent chats. This one's already exploding right away. So thank you for contributing, and feel free. This is more of a fireside chat where Kenny and I are going to be talking a lot back and forth. There's not many slides. We have no slides today. So we're always ready to get questions from the audience.
Yeah, I'm loving things like I see Laundromat in here. They even have franchises for that. Midas is franchised. Auntie Anne's, yep, keep them coming.
Yeah, and it's stuff, like obviously I said, I grew up in a family that was very exposed to McDonald's, so I was always aware of the fast food ones. There's so many other different businesses out there that people are trying to go after. So why would someone actually invest in a franchise to begin with? How do they start exploring this idea, and why would they do it?
Well, to begin with, there are several different reasons. The first is that a lot of people are seeing it as a way out of the corporate world. They want to own their own business, but, need some stability to it. Because really anyone who's started or tried starting a business here can tell you it is not the easiest thing. Having started multiple businesses myself, I can tell you the same. So franchising really comes in as like a business in a box. Don't reinvent the wheel, follow the playbook instead. And so you've got things like, for food, there's obviously the things like brand recognition is huge for it, but then there's a lot of things that you wouldn't have brand recognition for, like senior care, for example, very franchised industry. But if I listed off 10 different names that were franchised senior care businesses, you'd never have heard of them. But instead, what they do is they bring their business systems and operations to the table. So, how are you being found by clients? How are you servicing your customers? How are you marketing in general? So all these things are what are typically given by a franchise that help people really kind of skip the first 5 or 10 years in business and really just go straight to being an operator and making money. But there's another reason people get into it too. And really where I focused my business when I started my franchise brokerage, Semphia, is that a lot of people are seeing it as an additional income stream. They want to have a really alternative investment that can produce cash flow, that, it's got some tangibility to it instead of stuffing gold bricks under your mattress. It's, hey, there's the Supercuts down the street, and that's actually something in my portfolio. And you see people coming in and out, and it's also part of building the community together. So there's a lot of different reasons people get into franchise ownership typically.
Yeah. One attendee of the webinar mentioned El Pollo Loco. That one, Kenny, you need to help them supercharge their operations. It's an amazing chicken shop here in Austin. I don't know how widespread they are over Texas, but there's not enough of them.
They are actually very widespread. I've got that jingle burned into my skull.
Yeah. I've only heard of them when I got here to Austin. So Kenny, what are some of the, what could really trip someone up? Let's say they're trying to start their first franchise. What are some of those barriers that people can hit that make some franchises a lot harder to get into?
Yeah, well, first off, there's the cash requirement. So every franchise has liquidity and net worth requirements. And so liquidity, realistically, you're starting at 100 grand liquid, and they want to see a net worth of 400,000, 500,000 plus. Now, don't get me wrong, there are much cheaper franchises out there, especially if you start Googling around, buy a franchise, you'll start seeing like, get a franchise for 30,000. And, typically that's probably just the franchise fee. And then there's costs that stack up. And that's why franchising is actually regulated by the Federal Trade Commission. And so everything from startup costs to average returns to who the franchisor is, all have to be documented within their what's called a franchise disclosure document, or FDD. And so things that really hurt franchisees is they don't read this. They don't do the research involved for it. They might just kind of skim through it and say, all right, looks good. But I'd say that there's really 3 main reasons why franchisees fail. The first is, it's franchisor, operations, or capitalization. So franchisor, it's just like buying a home. You don't just buy any home. You want to find something that's your home, that's going to be with you there for the long term. So that's where I'd help people for years, is finding the right franchises based on their budget, their skill set, their goals. And so, but a lot of other people who get involved in terrible franchises, they do it the wrong way. They saw a line around a block for one location, or they read an article about it, or their friend's sister's husband told them about it. And really, if you think about it, this is like going for an open house for real estate and buying the first one that you see. And so you really have to go out there and do your research and find the right franchisor. And then from a capitalization perspective, it's when people are doing it individually, and especially at their first business investment, they really want to see, where can I save money? How can I reduce the cost of the investment? And so that leads to cutting corners, things like what your grand opening marketing spending is like, or hiring managers and say, oh, maybe I can find someone for 10 grand less. But these things that you start chipping away at from your investment are really things that were the foundation you're taking away from it. So, and then finally, the operations perspective, where it's, are you following the systems in place? Are you listening to the franchisor? I hate hearing from franchisors saying like, oh yeah, they seem great, but then they didn't listen to a word we say operationally. And it's also about if their skill sets really transfer from their corporate life to the franchise world. They might have been great at running an IT team, but then they go to, managing a team of hairstylists. It's a completely different ballpark. And so those are the three main reasons why, in my opinion, franchises fail.
Yeah. And so let's move a little bit past that. Let's say someone got past the initial, hopefully they, a franchise is 6 months in or a year or two in. Where does that money really start coming from after those investments in time pays off?
Well, as far as like where their money's coming in from?
We talk about why someone fails. Let's say someone's getting their feet under them and they're starting to be successful. Where does that return really come from when you invest in a franchise? Because some people are thinking like, how do I make money on real estate? Okay, the construction, the land value appreciation, like where do people start to look for a return? So, our real estate focused, our crypto focused investors can kind of think, okay, this is more of a business and operations that I need to get.
Got it. Yes. So when it comes to earning money in franchises, there's two main ways that I do it. And very similar to real estate too, depending on how you're doing it. So if you think about you're buying and living in a home, you're getting that equity appreciation over time. Well, the same thing happens with owning a business. It's an asset that appreciates over time. It appreciates based on typically how much you've grown it out. So if you have this recurring income from your clientele, that makes the value of the increase more. And then on the other side, there is cash flow, because they are paying customers coming in and actually being clients of the business. Well, then the owner of the franchise actually gets cash flow into their bank account from that.
Okay, and we're getting a lot of questions and appreciate that. So like I said, we sometimes have customers that are very experienced in an asset class. So we always like to start with a foundation, especially because this is our first franchise webinar we've ever done at Rocket Dollar. And this is also being recorded. As always, this will be in the Rocket Dollar YouTube channel about usually an hour after we're done here for you to share or watch again. So, Kenny, people are already asking, they want to know, hey, what are you cooking on at Franshares? Some of these franchise investments are very, very active. You just kind of talked about, the owner being involved with some hairstylists. Sometimes the new franchisee hopefully does well, or sometimes they're like way out of their league working in a new franchise, a new business. How can this possibly be a passive investment? And then can you kind of describe, there's a lot of active investment in this space.
Yep.
How can you possibly make it a passive investment?
Yeah, so I'd have to go right back to the three reasons franchises fail and address them, how Franshares is fixing them. So from a franchisor point of view, again, this is where I've been helping people for years, is helping identify who strong franchisors are, what their track record is, how many locations do they have open, what the return on investment is their availability in good markets, who the leadership team is. Is this going to be sustainable long-term? So especially, we don't want to invest in something that's going to be a fad, that's a flash in the pan and then gone. We want something that's really sustainable long-term. We're also looking for like who their competition is and what their competitive advantage is. Because typically, a lot of people like to say, oh, I want something where there's no competitors. Well, if there's no competitors, it's probably not a good industry to be in. But then the two things that I especially look for are the recession and pandemic resistant. So what things are still doing well in economic turbulence, especially things like hair care, automotive, fitness, waste management. But then finally, the big one's manageability. So, there's some that are owner operator franchise that you need to be in there and you are the lifeblood of the business. But especially these days, there is a increasingly growing amount of franchises that are what we call semi-absentee. So a good example is Supercuts. You go in there and you don't see the owner in there cutting hair. They have a manager in place, and their job as an owner is to manage a manager. And going off that, that's really slides right great into the operations side of things. So as I mentioned, some people don't follow the franchisor's playbook. I've known the franchisors a long time, and I want to follow their playbook because I know what it can bring for the franchisees. But otherwise, what we do is that we build out infrastructure in one of two ways. The first is that we outsource to existing management teams who have already run franchises for decades. Or on the other side, we might build out new teams for other portfolios. For example, if they're a semi-absentee franchise that typically has a manager in place and 2, 3, 4 employees, well, instead of one owner who's working a full-time job and paying attention to the franchise on the side, we're going to bring in a really experienced operator who's actually going to manage this thing full-time and all the locations around it full-time. And then finally, from the financial side of things, we're coming in building this like an investment fund. We want to come in properly capitalized, and we want to be able to say, hey, this is what they typically expect for grand opening marketing. Well, we want to blow it out the doors for the long term, and we want to hire not just who can we get a manager for cheap, who's the manager that's going to be invested in this for 5, 10 plus years.
Yeah, and this is, for the audience out here, this is super important for IRAs because, active investments can be extremely tricky if you start getting pulled too close to the business. You're really increasing your risk of prohibited transaction. I often use like a real estate example because this is the one everyone knows. If you're in the background, you're like the boss that shows up every now and again, just checks everything's going okay. It's probably fine, just doing like paperwork and important administrative things for an IRA investment. If you ever start transitioning into day-to-day business operations or work, you can immediately put yourself at an aggressive prohibited transaction risk. You should never be putting any actual sweat equity into the company. Really, you shouldn't be at, obviously can walk through it, but you shouldn't be at the physical location doing work at any time. So, going to the location to sign some important documents, that's fine. But let's say, hey, they need the place cleaned up, the manager needs help, and all of a sudden you're pulled and you're working at the location, you're going to have a prohibited transaction, and that could distribute your entire IRA. So Kenny, how are you kind of structuring, you talked on the kind of micro level on the direct franchise, but how do people actually access an investment like that that's passive?
Yeah, so because Franshares is working very much, we're similar to like a REIT, a real estate investment trust, where you have the management company that is overseeing operations and the investments. That's what Franshares is delivering to investors, or will be delivering, I should say. And so we are working where we have the management team in place. We are properly investing in the infrastructure, and then be able to let anyone invest in shares of that portfolio. This process really came out about 5 or 6 years ago as part of, it's called Regulation A+ of the Jobs Act. And what this does, it allows anyone to invest and get equity into company that typically wouldn't be accredited investors. This whole structure came about because of Kickstarter. Kickstarter, you'd invest some money and they'd give you one of their products back. But SEC came in and said, hey, you can't do that and get equity in a company because you need transparency. You need to make sure that it's a good investment. So they came out with Regulation A+, and you basically do like a mini IPO, and you do full disclosures with the SEC. And then because you're giving out those disclosures, almost like a public company is, you can then offer shares into that investment. And so every Franshares fund is actually has to get registered with the SEC. And on top of that, the franchising in general is regulated by the Federal Trade Commission. So with all this transparency, we're then able to offer shares, let anyone invest for as little as $500. And we've had a very wide range of people of intended investments there too.
Great. Thanks for sharing that, Kenny. And someone asked like, hey, they might have come in from the franchise side. They came in, yeah, from Kenny's side, not our side. So just for anyone who came, specifically from Kenny, what is Rocket Dollar? We help people open self-directed IRAs and solo 401ks. What our IRAs can access is a lot more investments than something that's Charles Schwab, TD Ameritrade, or Fidelity. All great companies, but they really just focus on publicly traded securities. So whereas like McDonald's might be a publicly traded security, a franchise is a completely different investment that's you can't go to TD Ameritrade and access that type of investment. So Rocket Dollar specializes in kind of opening up your IRA to all of these other different investment opportunities. So a lot of our customers invest in things like real estate, cryptocurrencies, startups, private businesses. And a lot of times they have a favorite investment that they're good at, they like, they know, and they want to see, hey, how, how can I do this in an IRA? Because you get all the tax savings of a traditional or Roth IRA to do in that account. However, there's just a couple of specific rules that the IRS has set out. These are called prohibited transaction rules. And our really experienced customers on this webinar, they know all about this. And sometimes people think these are a little too complicated, but with someone like Franshares simplifying an investment, making it a passive investment, that makes it much, much easier to access inside of an IRA with someone like Rocket Dollar.
Love it. And I also have to give major props to Henry Yoshida, your guys' CEO. I've known Henry for, let's say 3 or 4 years now, and he heard probably one of the earliest iterations of the Franshares pitch. And he's with Merrill Lynch for 10 plus years. So, love what he's done with Rocket Dollar here.
Yeah, it's a great boss to have. If you could, Henry kind of knows everyone. That's why if you ever go out and network out there, you're like, yeah, I was talking to this guy, Henry. Like, oh yeah, he's been very around for the last couple of years, pitching Rocket Dollar, pitching whatever he's working on or investing in. Kenny, you've got a really exciting launch coming up. I'd love if you kind of go into detail. There's some real specifics about returns and how do I get into the investment right here, but I'd want you to kind of talk about your launch that's coming up before that.
Yeah, absolutely. So as I mentioned, we have to go through the SEC registration process. And so ideally, we're looking that we should be clearing that later in January. And so people on the wait list, we're going to give more specific details about when it's launching, because we actually have a wait list. Actually, if you've seen the numbers flipping behind me, that's the current wait list. It updates when you guys sign up. And so we're actually going to really give preference to people who signed up early or who refer people. If you refer people, you move up the wait list. And, it's also going to be your forever order in the line. So for any future funds, they're going to get the same first crack at it.
Great. Yeah. And so, yeah, Kenny has a wait list on franshares.com. So a few questions have come up here, Kenny. I'm going to throw them out there. So Kenny, you've been a franchise broker. You have helped a lot of people start a franchise, but I'll read the exact question right here. Has Franshares actively bought or started a franchise, or are you in the investing stage right now and not there yet?
Yeah, so we are launching our first fund in January, so we haven't done it yet. But we've been working with all the franchisors very closely, and they're very excited about this. And actually, to get a little more specific on that fund, we're actually going to be doing 2 separate franchise brands in 2 very different industries. It's going to be 25 locations each. So total of 50 locations across the US. And it's going to be a $20 million fund. So we're making sure people are really diversified, both geographically and industry.
Okay. And you had, this is always a big question. I don't think anyone's asked it today, but have you thought of like a minimum investment number for that at this point?
Yeah, so the minimum investment's $500. And when people have been joining the wait list, there's actually a survey that pops up that shows like, hey, obviously this is very new, but what are you thinking about investing if you were to become an investor? And the range has been fantastic because this hasn't been offered before. So you get your 18 to 24-year-olds that want to do $500 to a couple thousand, all the way to your 55 plus that want to do 100,000, $250,000. I've had I think 5 or 10 that said $500,000. So our average intended investment, so a little over 20,000 per person, which is honestly higher than we've seen out of a lot of other people in the fractional investing space. So really excited to get it launched. And I'm glad we mentioned the wait list because I've been hearing that tick up.
Oh, nice. So that's actually your wait list in the back. I just got a thing called a tidbit. I haven't got it shipped yet, but I'm really excited. It's like it can have a stock ticker or a crypto ticker or any little fun thing in the background. So I'm really excited to start putting that once I get in my new house, everything settled up. So a couple people asked about liquidity. I know, what are expectations for some liquidity investment like this and kind of overall time horizon?
Yeah. So I have to put on my SEC hat here and say that, technically we can't do any guarantee of liquidity. No alternative investment can. It's part of why they're alternative investments, but we are doing our best to make sure that people will have access to it as much as possible. So from day one, there's actually going to be a trading platform available. So if you need to liquidate, you're able to list your shares up on there and the market will determine what the shares are worth. Now, obviously, because they are businesses that appreciate in value and have the passive income aspect to it, they should all be going up in value because of that long-term bit. So that's what I'm trying to do what I can for everyone, because I know that that's a huge problem. I looked at top people in the space from real estate and artwork, and top two complaints are liquidity and fees. So I wanted to make sure we address that as best as we could.
Okay. So Belzy is asking, how are shares kind of split across the investment? So I know you said there's two brands. So let's say someone comes to you with $10,000 to keep it a simple number. How is that money actually being distributed across the fund?
It is evenly split across the entire fund. So you're going to get access to all these different ones. So it's like you invest $50 in 50 different locations.
Okay. Okay, great. Let's see the other Q&A. I always leave it up to, so Kenny, just so you know, not to put it on your spot, but I know the SEC hat might have to go on here, but the questions come anyway. So people always ask like expected returns right off the bat. And I just, so the audience knows, there's the regulations with the SEC and we get these questions routinely on each webinar. Just know that whoever we're presenting with, they just have to take care of those rules. So whenever they give an answer and you throw that at someone, just know sometimes you can follow up afterwards too.
Yeah, I appreciate that. And so I do have to be very careful on what I say there. But one of the things I love about franchising, as I mentioned, is that being regulated by the Federal Trade Commission, you're able to provide a lot of information in those documents that are meant for investor transparency. So things like, what is the investment level? Not just here's the franchise fee, but in total, from start to finish, what does it cost? And then you're also able to do an earnings claim or financial performance representation. And so that's actually an optional part in franchising. I only work with franchises that do have that. And so before you invest, we included little glimpses of those earnings claims from the franchisors' filings in our SEC filing. So I can tell you that honestly, I should probably let the numbers speak for themselves and not get in trouble. But if you go to our website and check out some of the numbers that we did under waste management and food, you might be able to find some good figures from what the average locations do there.
Okay. Yeah. And one thing I want to, we can chit chat about for the customers is that, when someone starts their own business, there's a lot of risk inherently in there when you just go dive into business. If you're a very successful business owner, even some of those people have gotten socked in the nose pretty badly, an idea that they thought would work. What is great about a franchise is there is a lot of data, Kenny, right, about previous people who have succeeded and failed and how they did overall.
Yep, you get to see the growth or contraction in number of locations. You get to see if the franchisor's ever been sued before. You get to see if there's been bankruptcies involved from the business or from any of the leadership team. So there is a lot of information that you get from franchising, which is, I think, why we initially did our first SEC filing, and we got really the only comment was like, hey, can you let us know more specifically where they are? And so we're getting that filled out. But otherwise, because we're working with Federal Trade Commission numbers and I'm really experienced in the industry, they love this. It's been really good to see this going so smoothly.
Great. Yeah. So someone asked about fee structure right now and then overall for the funds over the years.
Yeah. So when I was putting this together, I first started looking at reviews for all the other fractional platforms, like I mentioned. I don't want to list any names, but whether it's real estate, artwork, collectibles, and the top two complaints I mentioned liquidity, and we talked about that. Second being fees. It's like asset under management fee, storage fee, just because I hate you fee. And people are losing 1 or 2% plus right off the bat. And so I started working backwards. I'm like, if I'm, especially looking at things like Robinhood and E-Trade, it's like if you charge fees, you lose the game. And so I wanted to see, is there a way we could not charge fees? And so we actually make money in 3 different ways. None of it comes from our investors. So we charge 0 fees to the investor. What we do instead is that when you look at franchise finance, and again, all the startup costs are outlined in those franchise disclosure documents. 80% of the cost is from signing the agreement to opening the doors. And that last 20% is working capital. Working capital is a line item included in the startup costs. So what we're doing is that we actually crowdfund 80% of the cost to get the whole startup cost of the business going. And then Franshares is actually doing working capital. So we're contributing that last 20% for the working capital. So we're partners on the fund. So we make money when you make money. We've got our, instead of diluting everyone with the carry, but we are partnering with everyone instead on it. So we make our 20% share in ongoing profits, as well as if we sell the portfolio in 5 or 10 years, 20% share of that. And then in the short term, another way that we make money is that, I came from the franchise brokerage industry. And obviously most people haven't heard of that, but most people don't wake up saying, I'd love to open a Supercuts, for example. And then if you do, there are literally there's more franchise brands out there than there are stocks on the market. So to have someone find you is very tough. So the franchisors themselves paid the franchise brokers. So if you were looking at Supercuts, for example, you could literally not talk to me, go straight to Supercuts, be the same investment level. So we're doing the same thing with Franshares in that we're both the broker and the buyer. And so we get a part of a commission from the franchisors from basically selling ourselves franchises. And then none of it comes out of our Franshares investors' pockets at all.
Okay. All right. Thank you. And again, thank you for the engagement, everyone. We are getting tons of questions, and that's why when I originally started talking to Kenny, I was really excited about this webinar. All right, so I'm just trying to clear out some of the questions. Thank you, everyone. Please be patient. I saw Brandon had kind of raised his hand. He said he asked about dividends.
Yeah. So for dividends, there's going to be about a 12-month hold period before we start paying dividends, because you can't just start taking money right out of the business. That's just cutting yourself at the knees. But after 12 months, we're going to be doing monthly dividends paid out to the investors straight from what's coming from the business. So yeah, people want cash flow. And I think especially real estate's normally where people get cash flow. But real estate, as everyone knows, getting very expensive. And then especially because we have a lot of institutional and international money coming in. I read recently that 1 in 7 single family homes is owned by institutional money. So, when the costs go up, that rate of return is going down. And so we really see this as like the next big passive cash flow investment.
Okay. And just for context, everyone, one reason we're so excited, but why there's a lot of questions about this structure, this asset class doesn't really exist yet at all, Kenny, correct? This is one of the first forays into this asset class, is really making this available in a fractional share model.
Correct. Once we're approved and out there, we're the very first to do this.
Great. And we had a question from Lauren, which is very important to explain context-wise. So it said, Lauren asked, wait, so does this mean Franshares is looking to manage 50 different businesses? Because that can obviously be a lot. So yeah, structurally, do you want to explain? I know where that question came, but what does that actually mean for the structure of the fund?
Yeah, so it is technically 50 different locations, but in essence, it's really 2 businesses because we're doing 2 different industries. So one is in the food space, and we are working with a restaurant management company that's very experienced with the franchise, and they basically cleared out the whole management team for Smashburger, and they're going to be running those operations for us. And then on the other side, the average headcount for the employees per location is 2 to 4 employees. And even with that, we are actually sharing employees between locations, because for that other brand, it's in waste management. There's no storefront. You've got salespeople and truck drivers. And so because of that, we can share them between the locations. So it's 50 different territories, but we're running it like a much bigger business, and that we have layers of management in place to make sure that they are run efficiently and not just like one random one after the other.
Yeah. So to further add to that context, Kenny and his associates are not running with their chicken with their head cut off to 50 different locations. It's that, you're obviously using that management and those management teams to help some of that outsourced management. Someone asked, Chris, can you pick and choose to not invest in the food franchise? So could I just pick like one, or how would that work with the fund?
No, so for this portfolio, you're getting diversified across the different industries because
Mhm.
food is still a good industry. It's you can see why other people aren't as excited for it, but there is a reason we picked this franchise. They are in a market that the competitors are. There's very few of them, and they're just not. They're very stale in the industry, I should say. And so these guys come from an experienced franchisor who their CEOs had two different exits after growing those franchises to a couple hundred locations each. And we have, as I mentioned, the really experienced management team. And so, as much as I understand the headaches, actually, personally, I come from a family, we owned a restaurant when I was in middle school and it ended up ruining the family. We lost everything, bankrupted my parents and led to divorce. And so like, that's the last thing I want. And the last thing, like why I'm hesitant about food businesses, but this one I absolutely love. And when we open up the fund and you're able to see all the disclosures and all the information, you'll see why I really like it.
Okay, great. All right, there's a few, someone had asked a few retirement focused questions a little while ago, so I just want to answer some of those.
Sure.
So does franchise issue Rocket Dollar customers tax documents annually? Where can Rocket Dollar customers see these tax documents? Does franchise have the investor portal too? So typically, the biggest tax document for Rocket Dollar customers is the fair market value, form 5498, which is what is the value of my current investments. So if you get a K1 or if you get any statement of any kind, you basically take that and put that into our investor dashboard on the Rocket Dollar website. And we say the value of the Rocket Dollar IRA was $5,000. Now, because hopefully if stuff is done well, it is $7,500. We typically take that after December 31st in the first few weeks of January. Rocket Dollar customers are really going to be on you in the next few weeks for all of your current investments once we get past that date, because we need that before tax time. And we like to get that well in advance because it's actually the custodian's responsibility. So our custodian partner needs that. And we just want to make that easy for both the customer and our custody partners. So once you have a value of your shares, you'll input that value of December 31st into the investment tracker. We will handle that main tax document for it. Roth IRA, someone was asking, yeah, so a Roth IRA does not have any capital gains tax. Our sales team would be happy to talk about that. A lot of people love Roths. There's some legislation right now. We have some updates in our knowledge base. The Roth is a pretty good deal in some ways. That's how people think, and they're really trying to get into it aggressively now. Talk to your advisor about it. But because there's no capital gains tax in the long run, people really like to get into investment in a Roth IRA and then leave that sit for many decades. Traditional IRAs, people that they're getting killed in taxes right now tend to favor the traditional IRA much more, higher levels of income. And the traditional IRA, even with the Roth IRA having more verbally more popular, way more Rocket Dollar customers actually open a traditional IRA with us. People ask about 2 to 3 times more about how a Roth IRA works though. So someone asked to clarify, you're launching 50 new units or new franchise businesses, not acquisitions of existing franchisees.
Okay. Yeah. So I do get this question a lot about new versus existing locations. And so we do new locations, but for existing brands. And the reason for that is that if we tried investing or acquiring new locations, there's really 2 main schools of thought. One is that they are already a successful franchisee. And when you're already a successful franchisee, you don't need the money. If you need money for expansion, you can go to a bank because you have great cash flow already there. And then honestly, they're like, why do I need to add on investors? I've built this up already. And then if they're a bad franchisee, we don't really want to figure out what they're doing wrong. And we don't want to try and figure out a turnaround for it. We'd rather build from the ground up correctly. And you're also going to see higher return on that because you're not paying the premium that is for the existing one. And again, this is one where we do look at, I've watched these franchises grow over the years and seen how people build out and start up, or, in one case, there's not even a build out required for it because it's a service franchise instead.
Okay. One question I'll handle. Someone asked about UBIT, which is a common tax question. It can be to tax to be aware of, not afraid of. Generally, investors that are passive are much more shielded from UBIT. We'll connect Kenny with our CPA contacts, to get some information on that. Kenny obviously can't give out tax advice, but just our CPAs, they can help go through some of that impact. Generally, passive investors have a lot less trouble with UBIT than someone who'd be straight up actively investing in a business and have much more control over that. Lauren, Lauren came from your franchise side and wants to know, can I invest in Franshares without an IRA? The answer is definitely yes, Kenny. Yeah. All right.
Yep.
I love that, Lauren. We're on the Rocket Dollar webinar, but Lauren's like, I don't care. All right. Great. I'm trying to read. I'm trying to read your chats, everyone, and you guys keep sending more messages. So
we appreciate it, guys. Thank you.
Yeah.
I love the support we've been getting.
Yeah. All right. Okay. All right. I'm gonna read the Q&A, and when this stuff's moving super fast, just so everyone knows, the Q&A makes sure I can see it. The chat is great for casual comments, but the Q&A makes sure I can actually take a good look at it before it moves away quickly. Is there a primary way investors can make money via the platform? Is by liquidating shares, or is it receiving monthly dividends that start after 12 months?
It's really from the monthly dividends in the long term, as well as the equity in the business. Like, to be honest, the trading platform is really there as a hopeful way to ease into liquidity in the future. But I mean, you're never going to be able to short any shares for it, and so like I don't want it to be a money off trading type thing.
Yeah, and just so everyone knows structurally why this is created is that even for assets that are not traded often, liquidity is a huge concern for investors. Maybe something came up and someone's just like, look, I've got the best opportunity in the world. I had a great time with Franshares, but like, I can't pass this up. I need to dump a bunch of my other investments and I need to get into this investment. That can really help just to have that option. So many alternative investments have very poor liquidity options. That's like, honestly, one of the tougher things about this space is when you, and why a lot of our customers, like somebody that doesn't really like crypto is like, why people trade crypto in an IRA? A lot of our customers are just like, it's liquid. I can sell it at any time. It's one of those alternative investments. I can click a button and it can be back in US dollars and I can be putting it in something else. So just having that ability really helps. Maybe you see another investment you're excited about. Maybe you see something else in the Franshares platform. You're like, yeah, I was enjoying these businesses, but that one is way more exciting to me. Just having some type of selling platform allows a lot more mobility for the investor. And I always think that's a really pro-investor move to work that into the platform. Okay. Theoretically, if $100,000 is invested and the average cash flow return is 20% each year, will I get $20,000 distributed to me every year, or is it some kept in the business and the franchises itself? That's a question from David.
Yeah, I mean, we should be doing it so it's 20%. Like, as it's anything that's required to hold on for the business is a business expense and wouldn't be counted as a return. So anything that is in the return section, 100% is getting sent out to you. So if it's 20% return, yeah, it'd be that 20% share and split up into monthly payments, obviously, or as the business is cash flowing.
Okay, so very simple question. We're going to ignore the IRA side for when we answer this. Can a Canadian invest in Franshares and the upcoming opportunity?
Yeah, we are available for international investors.
Great. And for now, I'm going to talk about the IRA side. If you are a Rocket Dollar customer, we're hopefully going to make it a bit easier for international customers to log in. We know that we require a US phone number, and that's really tough for some expats. If you have US income or you have all retirement accounts, you can open an IRA. Green card visa holders, they can open IRAs. Sometimes people don't know about that. So it's a great thing to take advantage of and save on taxes, because sometimes when people go back to their other country, they're not spending their US dollars for years or even decades. Great thing to take advantage of a retirement account, get that and have that be a growing asset. That's kind of a American nest egg that, if you ever come back to the country or have expenses in the US that you can use. All right. Is location management cut in with the ownership shares, or is there other parts of participation?
I'm sorry, can I get that in the form of a question?
Yeah, sorry. So people are typing, I'm trying to read it. Is location management get a cut in with the ownership shares, or do they participate
Oh,
the other way?
I think I got what they're saying. So it's not like a hey, we are charging a 1 or 2% fee to go towards the franchisors. It's that whatever the cost of doing business is going from the fund. And so everything that is profit on top of that. So like you pay managers, you pay employees. So any costs to do business are business expenses. And so then we are paying everything above that out to the investors.
Okay. Okay. Yeah, so Alex, thank you for going in the Q&A. It makes it a little easier for me to read off. So how do you see the current labor market challenges impacting franchises when they go out for employees?
Yeah, so this is a good one. There's two ways that we are approaching this. The first is that we look at businesses with lower employee count. So obviously you're not working with a business that has 20 plus employees and you need a lot more rotation in there. The other way is, as I mentioned, we are going to have multiple locations per each geography. And so instead of someone having to fight for hours, we have multiple locations that they can go work at between different locations. So when you have more consistent work throughout the week, you're going to be staying with that employer longer. Plus, again, I don't want to be cheap in how we pay people. I'd rather just keep people as long as possible, which means paying them appropriately. So it's the long-term strategy of appropriate pay leads to appropriate returns.
Yeah, and just here in Austin, there's some jobs people complain like, oh, there's not a service in this, but this. A lot of event jobs and a lot of things in Austin that I've seen locally that weren't very consistent, especially during the pandemic. Those places are really struggling to hire even more than other places with much steadier work. Those employees that, they might have been in the music industry, they might have been in something in events, which was previously very stable in Austin. The pandemic kind of threw that out the window. And, those industries have tried to get people back. And I say, sorry, I've got a much steadier job going on over here. I don't want to come back. So good that,
Yep.
Obviously you're already thinking about that. The labor market is important.
I mean, it starts from the top down too. It's like, a big part of that's like if you have crappy manager you work for, and how do you get crappy managers? You pay them crappy wages.
Yeah.
And so, again, that's part of what I mentioned about having the proper financial capitalization involved, is that we pay for the right type of manager that is at the top of their game and is going to run this the best. The employees are going to be happy and the customers are going to be happy. So it starts from the top down.
Okay. Is there a minimum period investor needs to hold the investment?
So again, we're going to have the trading platform to help facilitate ability for liquidity, but honestly, view this as a long-term investment. I don't want people thinking this is an overnight get rich quick thing. Like it's a long, you hold it for 5 years, hold it for 10 years. Honestly, hold it forever. I'd love if you did. It's something where it's starting a business. And so I'd say like the longer you hold it, the more established the business is, the better the returns are going to be.
Yeah.
So, it's don't invest in like, oh, maybe I'll have to pull some of this out. It's like, honestly, think of it like you're buying a house. It's a long-term investment. You're parking the money and you go from there. So I don't want to tell anyone like, oh, hold it for 6 months. You'll be great. It's just, it's not how you should view this, to be honest.
So,
it's not crypto.
Yeah, just think about a business that's opening down the street, their grand opening, maybe when a little buzz gets started, maybe when they get a lot of good Google reviews going, these things take time. And I think, Kenny, you said at 12 months, that's when some of the dividends start paying.
Yeah.
Yeah.
And you actually hit a great point too of like where our model is really great for the investment in general, because when you look at these fractional real estate or artwork or collectible companies, they don't use their greatest asset, which is the crowd. If you look at what happened earlier this year, Reddit versus Wall Street, we saw that the crowd can literally move markets. So, we really thought about this and how it's really like a circular economy, and that, we're going to do a lot of marketing to the areas where the locations are opening, direct mail as well as online. Because when you have people who own locally, they're going to want to shop locally. They're going to be customers of their own investments. They're going to be ambassadors on the ground and tell people, oh, you didn't like your gym? You should go to the Orange Theory. I own a part of it. And so, these are the things that really help them gain even quicker traction, as well as are just long-term, more stable businesses.
Okay. Just to let everyone know, we have like 10 minutes left of our scheduled time. Kenny, I don't know if you have a hard stop, but I already see 16 questions on the docket. So we can,
I'm good.
yeah.
My next one's at 3:30. So, or
Okay, we
3:30.
got
So yeah,
like we can keep rolling a little bit over everyone. If we got
honestly,
a
I'm
lot.
all about answers. I'm all about answers and transparency. So like, throw
Okay.
them all at me.
All right. I'm just, if I skip everyone, it's not trying to slight you. I'm just trying to really get through the most high quality questions or one that we haven't covered a bit before. And we're going to remember, we're going to have this up on YouTube afterwards. Will there be ability to automatically reinvest the dividends into something in something else on the platform?
Yes, we will be having that. And one of the great things is that actually holding it long term, there's also that, again, I'm not a tax advisor, so you should consult yours. But one of the things that's really good for this is that you've never had a small business investment like this, most likely. And so there is something called qualified small business stock. And so ideally, everything I've been told is that this should be fine. But again, I'm not a tax advisor, but the idea is that if you hold for 5 years with that QSBS, that your sales actually tax-free too. So that's a cool thing for it, and why I'd encourage to keep rolling over as much as possible.
Yeah, and then so that then we also have the IRA, and some people ask about certain tax benefits. Just remember, in the IRA, there's no capital gains, and without UBIT, you're generally avoiding all taxes in there. And sometimes we get people that are like, "Why would I invest in anything that has some tax write-offs in an IRA?" And it's kind of a obtuse question, because it's like, look, if it's a great investment, maybe just do it in both. You have some in taxable side, and then you have some in an IRA. Don't sleep on those tax benefits. But if it's a good thing in your IRA, a lot of people complain to us and they're like, I don't like my bonds, I want to move somewhere else. So why not consider an investment? Maybe you lose, like real estate people, they're always frustrated, they lose a 1031 exchange in the retirement account. They're not really always looking at the full picture, because they're already getting a really tax efficient investment in a retirement account. So I just say split that up. If you've got really good tax write-offs, do some in the taxable side. If you really get excited about the investment, do some in this IRA as well. Visit the CPA, see where the efficiency is. If it's not that great, go do it in the retirement account and get the complete tax-free there. Okay. So we cannot choose the industry or franchise company to invest. We've put the 500 minimum. So it's this was a little bit more curated in the fund, if that's the correct way to say it, Kenny.
Yeah.
And as opportunities keep rolling out, Kenny's not going to do this once and be done. It's the as more things come out, Kenny, there's going to become more opportunities and a little bit more investor choice where you want to go invest. Is that correct?
Yeah, there definitely will be.
Yeah.
It's our first fund, and so I want to give everyone equal exposure to everything. And just like someone asked about, like, I don't want to do food, could I not do that? There'd also be someone who says, I don't want to do waste management. And honestly, I want everyone to have access to all of it, so you can see how these different businesses build over time and what's consistent and how they work. So I think it's good to be diversified, especially with a new type of asset class. So that's why it makes sense to start off diversified at first.
Yeah. And so I'd say, if you're like, hey, I love the idea, but I'm not so about this first fund, then how about you just get on Kenny's wait list? You keep watching on his email list, and when something pops up that really catches your eye, then you can really say, okay, this is where I'm going to dive in. So I just say, look, if it's not for you, take a look at, get educated on it, and keep that in mind. I find that was a really helpful thing for my own personal investment. I was learning stuff, but if I just jumped in right away, even if I didn't like a certain stock or asset, that's when I had a bad time. When I sit there, really learn the asset, and then I said, okay, I understand this now. Now I'm on the lookout for my favorite opportunity. Then when that pops up 6-3 a year later, you're ready to dive in right away on it because you already understand the investment.
I appreciate that. Yeah, because we're very big on education, because again, no one's invested in anything like this before. So even for our wait list, we just sent out a great ebook or / white paper to everyone. And as you sign up, we'll be getting that to you as well. And this is why I want to be on webinars like this. This is why I'm on podcasts. This is why we're going to be doing a lot of educational content to everyone on the wait list, because I want you to understand it first. Like, you should never invest in something you don't understand. And so, that's why, I really appreciate the 30 plus people who've signed up since we started. And, it's also like when you sign on, you'll see that I actually reach out to you and I say, hey, I'd like to talk to you and I'd like to learn what you like and don't like. And so, that's actually, I've had 6 of those meetings today. I want to hear from our users what they're looking for, what they want, what they dislike, what they're fearful of, because this is something that long-term, I want to be the next big asset class.
Okay. So Scott asked, how many investors will be able to participate in each fund? So I know you said about 20 million is what your goal for this fund, correct?
Yeah, so it's a 20 million fund, and it's really going to depend on what everyone's putting in. Like I said, our average intended investment right now is a little over 20,000 per person. So it might be just 1,000 investors. Granted, for a wait list like this, there's plenty of people who are just going to be looking for the long term and hop in when they're ready. But that's why it's important to hop in now, because we'll be doing bigger ones in the future. But these people who support us early, I'm going to take care of them in the long term, and they get first crack at every fund. So, get on it now, see if you like the first one. If not, like come later.
Yeah. And so someone asked, like, does investment size kind of change where you're on the wait list? I think where you're first on the wait list is really the best thing for you, is to get on there.
Yeah. Yeah. So it's not about investment size, it's about referrals. Because frankly, we don't charge fees. So, the easiest way for us to really grow is to get referrals from people. And everyone here just be like, hey, I heard this guy talk about it. It sounds cool and interesting. You should check it out, hop on the wait list. We're also going to be announcing a big paid referral program coming up for people who do refer. And it's retroactive to everyone who has referred. Don't think I forgot about you guys. But so that's really the biggest thing to move up the wait list, is to refer other people.
Great. And Rocket Dollar customers, thank you. You are all out there telling people about us. That has been unbelievable over the last year and a half, how much we've grown just through word of mouth. And it's turned some heads. So you as a customer have power. And we love the customers that really get involved, that are bringing up what they like and don't like and being helpful to us. And, the marketing and sales side, that's such valuable information. All right, Aaron asks, do Reg A limits apply to investors, which 10% of income or net worth, etc.?
Yes, that is going to apply. So you do have to, you can't go above 10% of, I believe which is greater, your 10% of your net worth or income.
Mm-hmm. Okay, and a lot of IRA, this is my question, but a lot of IRA customers say, hey, there's something like an accredited investor rule, or there's something like Reg A, does that apply to my IRA? Generally, you can think the same rule, like if there's an investor restriction, you should just generally try to apply it to your IRA at the same time. So like accreditation, typically decided by the fund itself, and that also applies to you and your IRA. You don't get to get out of accreditation because you're using an IRA or even an LLC. So we use an IRA LLC, but accreditation usually just carries over exactly the same. So do you have to be accredited? Simple question, Kenny, for this franchise investment.
No, you do not.
Okay. Always very important. Haven't seen anyone ask it, but that's because they're really excited they can get into this without accreditation. Can franchise shares be used as collateral in a loan to access liquidity rather than selling?
I'm not going to touch that. I'm not a investment advisor. So I'd say talk to your financial advisor or accountant. That'd probably be the best way. I don't answer things I don't know the answer for certain to.
So Aaron asking that question, they're asking that because some other asset classes do that. I'll definitely say that type of feature is like an advanced brokerage share style feature. It's been done in some alternative markets, but that is something Kenny can talk to some bigwig professionals about later on down the road. That's not going to be available like day one on the Franshares platform. Okay, and it's so you said Franshares is available for international customers. We said that earlier. Okay. Is there a dashboard or some type of visualization where investors can track investment performance? I know some of that stuff is tough to build. So how's that going to look, Kenny?
Yeah, absolutely. So we're going to be giving out updates for everything from when the locations are being built, how performance is going. It's also part of the SEC regulation too, is that we have to do audited financials twice a year, I believe. So, we're going to keep the books up to date more than that, obviously, and I'd rather share them with you guys and make sure everyone understands what's going on.
Okay. All right, gonna keep rolling through these. How do franchise tend to perform in high inflation environments? So I guess a general inflation question.
Yeah, that's a great one. So this is actually a fantastic asset for inflation times because as prices are inflating, if you're holding other investments, you need to keep up with inflation. Well, with franchising, you are a boots on the ground business. And so your prices go up accordingly because the value of the dollar. And so because you're both getting the performance of the business along with the increase in the prices to match inflation, you're going to be doing very well in the environment.
Yeah, so something simple as putting the price of a haircut up by $2 to $3, or your burger or your food is slightly more expensive at that franchise. That you have the franchise has a lever to mash very quickly that other asset classes sometimes do not have. All right, do people running the locations have any equity? Are they kind of involved and bought in the equity side of the investment?
In fund one, no, because we're trying to make sure we perfect that before we offer it. But in the long term, we're definitely going to be doing a lot of that. I want them, personally invested in the business and also do things like offer retirement for them. And, these things that are typically only found at other companies, but, we want to keep these people around too for the long run. Great example of it is actually Chick-fil-A. Actually, you guys want to throw some answers in there? How much you think a Chick-fil-A costs?
Yeah.
It's a little quiet, so I'm not sitting up here with a.
Can throw that into the chat. 10K
Oh, you guys have been cheating. Normally when I ask that, I get, yeah, there we go. There's the million. There's 350K. Yeah, so if you were to do it all outright, like a McDonald's location, it costs $1 million to $1.5 million for it. I appreciate it. Aaron said did our homework. Well,
Yeah.
There's a good chance you actually heard about that from me. I wrote about how much a Chick-fil-A franchise costs on Quora, and it got sent out to 40 million people, and it's been on a couple different articles have been done on it. But so what Chick-fil-A does is they said, hey, the people who run the locations the best are the ones who come from within. It's not someone who came off with $1 million from the corporate track. It's someone who started minimum wage, worked their way up. And so because of that, they finance the cost of everything and give the owner a very hefty salary plus a pay for performance. Plus when they sell it, they get a multiple off that. And, this is the same thing I want to emulate in Franshares in the future funds, is that they get equity in the business that they're working in and in the company itself. Obviously, to make both the investors happy and the employees happy, we need to find the right balance, which is why we're not doing it in the first fund. And so, but yeah, I'm really excited for being able to offer that. We have a big part of, financial equality going forward. We actually are, looking to how we create generational wealth. I want in 10 years from now, I want people to say, hey, I started off minimum wage and eventually I worked my way up to where I owned a business and then I sold it and then I bought another one. And so that's what we want to do long term.
Okay. Kirk had a question. Will you offer an auto invest program so investments can be made monthly?
I get that request a lot. I think down the road, we definitely will, not for the first fund because, it's a closed fund, is that we can't ongoing keep taking on investments for this. Once we hit that 20 million cap, like that's it for this one. In future ones, we're hoping to, but it's also like a careful balancing act of having the cash there for the business when it needs it as it's starting up. And also making sure that, people sign up for an auto invest and then cancel it, that hurts the other investors. So again, it's a part where like, until we have completely ironed that out, I don't want to put anyone at risk for it.
Okay. David, not for this question, Kenny, I think he should email you afterwards. It's just something more about returns and stuff like that. So I'm going to have David, how about you email Kenny afterwards and he can go into some of that stuff in greater detail. Not the best answer live here on the webinar.
Or if you've signed up for the waitlist, if you haven't already, and you'll get an email from me and we can book a time to chat for 15.
Yep. That'd be a great way, David, to dig into that, like super specific stuff. So I think Rafi is asking a question again about structure, and this has helped people visualizing. I'm not sure if there's somewhere on your website, Kenny, if I can just pull it up real quickly. We didn't plan on really showing anything, but the structure of the fund, if I could share my screen, I think that would help this question. Let me read it. It is Franshares essentially just a self-managed ETF consisting of portfolio of franchises? Or is it a trading platform to buy and sell shares of individual franchises or funds? Is it?
Well, I say I can answer in the long term, it's both. In the short term, it's the ETF model where you're getting investment in a diversified portfolio.
So fund one is going to have 2 brands with 25 locations each, if I'm correct.
Yep.
I'm wrong. Yeah.
You got it.
Yeah. The 25 franchises in one brand over here in one industry, 25 in the other, combined into one fund. So, yeah. And Kenny can really, I think like talking to Kenny on the phone or having that he can really, go through the granular stuff or going to Franshares websites. That'll help some of you get your head wrapped around it. So this is a new asset class, and Kenny is really trying to bring that fractional share model to this asset. So keep digging into it, keep learning about that. It's exciting how Kenny is structuring this. All right, let me.
Yeah, and when we finish our SEC registration too, like that's something that every investor has to get. And so I encourage everyone, like, go through it, read it, learn. Like, they have to disclose everything about the businesses that we're starting, my background, the fund's background, audited financials, like all has to be in there. So again, that's why we're doing it this route instead of just like, hey, it's a very closed, private, accredited only, because honestly, that's how people make bad investments, is that there's not the transparency there. And so that's why, both between Federal Trade Commission and SEC, we are very transparent.
Okay. I could say we could maybe do 10 more minutes, everyone. I'm probably gonna have to cut that off and give Kenny time to go back because we're still at over 15 questions. So
Man.
Referral commission, go to the Franshares website to learn about the referral program, join the wait list. I believe that'd be the best way to get in touch about that. We kind of answered that already. The UI to look at the progression and success of the company. Kenny, you talked a little bit about this already. Would I be able to see like the franchise owner and the management teams leading this stuff? I don't have experience investing in franchise. So he's what Connor's asking is he'd love to see like, is it just like one statement a quarter, or is there actually like really super detailed stuff on the fund that he can dig into, both static and live over time?
Over time, yes, but like before the fund, no, because we haven't started yet. But you are able to see, like, again, those like investment costs by line item, as well as what the average returns are based on their financial performance representation. Mm-hmm. And so all that stuff we included in our SEC registration, as well as extra information on what the hell a franchise disclosure document is, because again, big on transparency.
Yeah, and I think sometimes I had this happen when I was first investor as well. Sometimes investors get really intimidated by what I would call like the raw document, the legal documents and the statements that go like into ultra depth. And they're just like, I don't understand any of this. I'm really overwhelmed. And they put it down and never look at it again. I would very much encourage you to not overlook those documents, even if you only understand a quarter of it or even 10% of it. Look at it, keep absorbing it, try and just get a little bit of nuggets out of that. Because, Kenny's team and Franshares, they can keep building illustrations and stuff for you, but where is it coming from? It's coming from those very raw documents. So as an investor, I'd encourage you to keep looking through those, getting better at seeing those. And as you keep looking at alternative investments, you'll slowly become more experienced at like, okay, how does this asset class actually present all their information? All right. How often will dividends be after 12 months?
Wait, sorry, say again?
So dividends start off 12 months. Will it be monthly, quarterly, or what would be the schedule be for that?
Monthly is what we're looking at for it.
Okay.
And also, as far as like, I know we keep referring to the SEC registration. You can actually go to the SEC and open up our report. It's a public filing. They ask if you want to do it public or private. So we put it up there. If you look up a TNT franchise fund, it's literally like TNT, like dynamite. It's supposed to be for takeout.
Into the chat. So type that into the chat. Sure. You can even put the link if you wanted to. That's fine.
Why don't I do that? Because there's the link for that. Here's the name of the fund. And the reason we called it TNT, it's takeout and trash, because as you'll see, it's food and waste management. So it's my dumb humor pulling through.
Okay. So this is the tough question. This happens to Rocket Dollar too. We're used to getting it as a 3-year-old company. Franchise is a new business. We always get this. What happens? Rocket Dollar goes out of business. So what would happen if Franshares went out of business or went bankrupt?
I imagine just like any other time of business or company goes bankrupt, pay back, yep, everyone pay back the investors as much as possible, and then try and seek stuff elsewhere. It's an investment. So like I said, there's definitely inherent risk for it, which is why we're putting everything out there as far as transparency. We want to minimize those risks as much as possible. So it's just like, actually, for people investing in crypto, I find that question hilarious.
Yeah.
But yeah, so that's what we're doing, like between the SEC and FTC disclosures, to make sure that you understand as much as possible and believe in what we're doing, and see the fundamentals within it.
So just to separate it for our customers, there's like Franshares as the platform, and then there's fund one, the TNT fund, and future funds, where all of those business operations are going and investors are investing into that actual fund. Okay. All right. What happens if the fund needs more capital due to unforeseen circumstances? So right now it's a closed fund. That's what Aaron's question.
Sorry, is it a closed fund?
Aaron, it's the $20 million fund that you're raising. Aaron asked, what happens if the fund needs more capital due to unforeseen circumstances?
Then we would go for further working capital, and everyone would be basically, the business would be paying the interest for it. So instead of getting diluted, it's the business taking out a loan for it, on top of what franchise contributed. So just like if a franchise in general needs money, they go for a business loan.
Okay, so I find this a very interesting question, but Kevin asked, why do you think fractional investing for franchises hasn't existed before?
Oh, great question. And I got asked this by every VC that I talked to. And there's a couple reasons. One is that, you need someone, just like anything, they ask about founder industry fit. And so I've been in this industry for, like I said, almost 10 years. And so most people who have 10 years of franchise experience are a couple decades older than me, probably. And they usually find franchising later in life. Mm-hmm. So they're usually not looking at how do we fractionalize this? They're already doing great in the industry. And then the other side is, if you came from an outsider point of view and you said, oh, I'm going to fractionalize this, you'd start looking at like McDonald's and Subway and all right, let's fractionalize this. Well, frankly, fast food has terrible margins. They're not great businesses to invest in. They have the highest startup costs. I call it the war for pennies, like the terrible margins, highest number of employees. It's a nightmare. And so, especially like people get caught up by the big names and assume that means big returns. You can look up the reports on what an average McDonald's makes. It's not great. And honestly, you guys probably wouldn't be interested if I brought you, like you'd be interested in the name and then you look at the numbers, you'd be like, not that interested. And then a Subway is, that's one of those ones that carries a big name, but people don't read the fine print. Like they assume Subway's big, there's so many locations, must do great. Well, then they don't think about like how you look through those federal disclosures, like I mentioned, and you see that there aren't territory restrictions. So if you ever see one Subway open up basically across the street from the other, that's because there's no territory restrictions, which hurts the franchisees, not Subway corporate. They get twice the exposure. One of them fails, and then they have another one there that's going to reap all the benefit. But when you're looking at a good franchise to invest in, these are the little details that you have to look at. It's literally one line and you miss it, and then your investment can be put out by someone who's part of the same franchise family as you. So hope that answered the question.
Okay. So Justin asked, how are you safeguarding that franchise operators are skilled and have the ability to be solid operators if they aren't putting in 100% of the investment capital to get it off the ground?
Yeah, and so that's where we're looking at people who have been in like the operations side of thing, but not the ownership side. So a good example is like, let's look at the Supercuts one. If they've managed 3 locations before, well, they're kind of stuck under that franchisee, and there's not really any room for upward mobility. Versus with Franshares, we get to bring them in. And honestly, as long as we are paying them appropriately, it's still giving our investors good returns. We can afford to pay them more, and we can give them, say, hey, we're going to have you manage 5 locations now or 10 locations that the other owner didn't have the money to scale up before. Or the other side is that we are bringing people in who, again, come from already experience in their franchise management companies. And so this is where they get a small percentage for the ongoing operations, and they're incentivized by performance. And so, again, we are working with one company that took a lot of the operations team from Smashburger. So, we're looking sure of this because, again, this is about the long-term success of the fund, not just finding who would do the job, it's who's the best fit for the job.
Yeah. Thank you for that, Kenny. Someone asked, when do we know what the two brands are? You said waste management and food. So it would be good to join the wait list. You can find that out on the wait list if you want to know more on there.
Yep. Can't give away all the secret sauce.
Yes, not all of it until he's got your email. Then you're stuck getting the emails.
No.
Yeah, sorry, us sales and marketers, all we want is your email so we can spam it into oblivion until you hate us. Will there be a recording? It will be on YouTube, always in the Rocket Dollar YouTube. Just trying to pick the highest quality questions here with our 3 minutes left. Someone said, will you be paying ongoing franchise fee to franchisors from whom it licenses locations? How is that managed?
Yeah, so royalties. Royalties are how make franchises money in the long term. If we didn't pay a royalty, they wouldn't really care if you succeeded or not. And so when we're paying a franchise fee, we are not only like paying for the business model that we are getting that makes our lives much more easier and predictable, but they also reinvest that money into things like marketing, better technology, operations, adding more to the staff to make your life even easier. So yeah, we're paying royalties just like every franchisee does because that's the business model.
Yeah, and to expand on that super quickly from like the McDonald's side, like the cups being made, making the menu more appealing, all those like Super Bowl ads for McDonald's, those are things that McDonald's corporate is working. And, there's always like a tussle back and forth and, your business partners. So they both have their own interests, but, you're working together and that's kind of what you're paying for from the franchisor. And all of them are obviously different. And Kenny knows way more than I do about that. Okay. Franchise receives a broker commission for each unit. Is that money going directly to the balance sheet or is it going towards supporting the opening launch of the 50 locations?
I'm sorry, could you say that one more time?
Yeah, sorry, we're on limited time, so I'm talking fast. Franshares, the Wolf asked, he knows about franchises, receives a broker's commission for each unit. Is that money going on Franshares' balance sheet? Will it go towards the opening launches of the 50 locations?
That's going towards our balance sheet. So that's like for upfront stuff, as so we can actually like keep our lights on because we're making money in the long term with all of our investors. So yeah, that's the short-term way. And so instead of charging 1% asset under management fee, we get a couple percent for those first upfront. So we're able to run them in the long term.
Yeah, and so what you're talking about earlier, Kenny, is that helps so like the fund doesn't have like obscene asset fees on that so that the fees can remain lower for the actual investor. What happens if a franchise is getting bought out? Do investors participate in the windfall?
Oh yeah, no, that's so we're gonna have different types of funds in the future, from like income ones where we hold them indefinitely and you keep getting income, but then we'll also have growth funds so that maybe every 5 to 10 years we sell it and then everyone who's a owner gets their equal share. So no one's getting any preferred treatment on the sale price there.
Okay. And yeah, so sorry we don't have this. Kevin asked, like, could he get like a diagram or picture of the business model? I think going to the website would be best. And then I would say, hey, can I ask for a little bit of a diagram or something like that? Kenny can send that to you afterwards. We wanted to really be this conversation and we wanted to focus on all of this very rich Q&A. So with that, we're at 3:20 here Central Time. I think we're going to call this webinar to a close. Thank you so much. There were still like 4 questions. I'm sorry we didn't get to them all. Please, Kenny, can you put your email in the chat box there so everyone can see that? Thank you so much, everyone, for participating. Seems like this was very well participated. So Kenny, I believe we'll definitely have you back sometime, maybe early next year. To talk.
Awesome, appreciate it. I also threw my LinkedIn up there too. Like, guys, I love networking on LinkedIn, and you see, got a lot of good stories and content comes out. So please add me, ask me all your questions on email or whatever, and happy to help however I can.
Okay, thank you. All right.